everybody is back. And so, yeah, why don't we, before we start off, we'll just have our panelists introduce each other. Shri, you want to start us off?
Sure. Hi, I'm Shripriya. I am at a fund called Spero Ventures, which is a $100 million single LP fund where we invest in the things that make life worth living, well-being of people on the planet, work and purpose, and human connection. My background, and I apologize to those who've heard it a couple of times already today. I've been in Silicon Valley since '99, primarily in product and product marketing roles. I ran global product at eBay for a number of years, and then moved to New York to go to film school at NYU, and then moved back to tech. And I have been institutionally investing since 2015. And I've known Charlie since
2006.
2006?
Yeah.
So.
Cool. Michael?
Sure. Hi, everyone. Michael Carney. I'm a partner at Upfront Ventures in Los Angeles. We are historically an early stage fund. So we have a $400 million early stage fund, mostly seed and Series A, tend to lead rounds, be pretty active and hands-on. Recently raised our first kind of external facing growth funds who are also investing out of that as well now. Kind of Series B through D type deals. We're not leading pre-IPO rounds or anything, but kind of beyond the Series A where we'd normally enter as the core fund. Spend most of my time in fintech, real estate, insurance, kind of SaaS generally. And then, we as a firm are kind of cover all the bases except for life sciences.
Cool. And Don?
Yeah, I'm Don Stalter, based in San Francisco, covering the US with Global Founders Capital. We have 1.2 billion under management. We usually come in at the very early stages and then try to double down kind of in subsequent rounds. We don't have target ownership. We're also, able to do growth investments. We invest across consumer, software, healthcare, biotech, clean energy, and we have sort of expertise in-house to help us, partner up with businesses in those categories.
Cool. And Ashley?
Yeah, so I'm at Lightspeed Venture Partners. I focus mostly on consumer and early stage consumer, so seed and Series A. I'm especially excited about vertical social communities, marketplaces, and also the aging economy. But broadly, the fund is $4 billion in the current funds that we're investing out of, and pretty much any stage and nearly any industry sector. So very broad focus overall. And previous to flipping over to the investing side, I was on the product team at Thumbtack, and then also did some projects with BetterUp, which is a mental health company, and Fundbox, which is a fintech company. And then before that, I started my career at Bain & Company.
Cool. I'm so glad you're focused on aging, because we have aged a lot in the last couple of weeks. So.
Oh my gosh, totally.
Cool. So I'm going to go in starting out pessimistic and work our way towards optimism for the arc of this panel. And I'll just, kind of kick it off and say, like, who do we think the most bearish person on this panel is? Does anyone want to, raise their hand and say, you have this near, how bad is the sort of near-term projection until we start to see something like normal? I guess by the nature of being a VC, we have to be a little optimistic.
I wouldn't say I'm overly bearish, but I think the recovery is going to be slow. So even if we get back to work, or if we kind of get a handle on the virus, I think there'll be a persistent anxiety amongst consumers and businesses, just in terms of how they spend money, where they spend time. I actually read a great analogy, or I thought it was a great analogy the other day, which was our economy or any individual company is like a really complex Lego set, and it took all this time and these instructions to build it together. And somebody just knocked it over and all the pieces are on the floor. And so the idea that you just kind of build it back up, you hire tens of millions of employees and you kind of go back to work tomorrow and it looks exactly the same, is probably unrealistic. And so again, even if we open up June 1st, July 1st, whatever it is, I would say I'm of the belief, and we've been counseling our companies, our existing companies certainly, to plan for a slow recovery. Things may look different for a period of time, even if quote unquote we go back to life. as normal. So in that sense, I would say I'm pessimistic on the speed of the rebound, even in a kind of a good case scenario around the healthcare crisis.
Given that, do you think that the time horizon in which people should be raising for now, if they're pitching, should be extended? That we're going from a 12 to 18 months to, should people be thinking about pitching 24-month plan, 36-month plans? Shri?
I think 24. I mean, we tried to get all our companies, even those that were planning to raise over the summer, into early next year. And I don't know that it will be good even early next year. I think I'm with Michael in the sense that I think after summer of next year, towards the end of next year or early 2022, we'll start really feeling much better. But we're trying to get them to tell stories that will, where if they're raising now, will last them into 2022 and be at a revenue rate where they can raise their next round, right? And that's the challenge, because even if you can make the money last, can you hit the growth goals that will get you a Series B valuation? Will you be at whatever the revenue numbers are that will get you that raise? So that's the challenge.
So Don, you guys participate across a number of different stages. Do you think the bar has shifted, or in companies, like, how will you guys evaluate maybe even some of the later stage stuff? How will you evaluate this year, right? To Shri's point, a company who makes the runway last longer, may be doing it with less people, may not hit what was otherwise considered to be the Series B level before this, but still might have some growth. I mean, do you think the bar has shifted, and that you'll maybe be doing different types of rounds at different stages?
Yeah, I mean, I think I think we find a lot of value in our capital at the very early stages. I think valuations on growth rounds, particularly over the past few years, have been impacted by likes of SoftBank. The market just being just such a bull over the past 12 years. I think you always have a chance to start anew, or really be part of sort of the nuts and bolts creation of something at the very early stages. I think kind of agility of entrepreneurs across every stage is something that's totally key. I think the ability, as we've talked about kind of many times now, to be remote, to whether you're wearing your sweatpants or whatever you're doing, to be able to execute on some ideas and to actually generate some sort of revenue runway, etc. I mean, if your thesis is in a category that's been impacted, if you're able to generate service or consulting revenue sort of alongside it and be MacGyver, we tend to be very impressed. I think at the heart of it, we're entrepreneurs. So if we can kind of work side by side with people, get conviction and enjoy working together, that's what really gets our blood moving, kind of no matter the circumstances, but particularly kind of during these times.
That's an interesting point. You bring up like consulting and other types of revenue that maybe VCs weren't excited about previously. Mm-hmm. Ashley, do you think that you'll see more stories that are not crystal clear up and to the right, and the VCs may be a little bit more forgiving, and the pitches will just be like, hey, here's how I got here, and it was eight different lines of revenue, and it was kind of all over the place, but like, hey, we survived. I mean, do you see yourself being more accepting of plans like that? Or experiences?
Yeah, for sure. I mean, I think it all has to be taken into context, and with the current downturn, I think we're going to be looking a lot at how people are reacting, and are they reacting fast, and are they reacting in a way that makes sense for their business. And I think that's a really good bellwether of how strategic they are and how fast they'll be able to rebound. So I think whereas in the past we may have looked a lot more at metrics and wanted to see things like 3x year-over-year growth or certain revenue hurdles, rather than honing in on that, I think we'll really hone in more on the quality of the founder, the quality of the founding team, and what actions have they taken to make the most of the situation and to put their business in a strategic position to take advantage of the new opportunities that are coming out of this time.
Founder quality is actually a really interesting point. In working with especially your current portfolio, what are some of the qualities that the founders, when you walk out of some of these meetings, I know I personally can think of a couple of companies that are the worst hit, but I have the most confidence in the founder from how they acted. What are some of the things that have emerged from your portfolio in terms of founder qualities that give you confidence and maybe even inform the kinds of founders you're looking for during this period?
Yeah, absolutely. I think it's people who recognize the reality of the situation and are taking a realistic view. So there's been some cases where people model out different scenarios and sort of what they think is the worst scenario, I would more consider a middle of the road scenario. So folks who are really realistic and understand that hey, bad times are coming and here's how we can hunker down and get prepared. So I think that realism is important. I also think, people who are willing to pivot, people who are willing to break the rules and do things in a different way than they've done in the past just shows a lot more sort of innovation and innovative thinking. I do think there has to be a lot of precision with how people are operating, given that there's just less cash to throw around. So folks who are taking a measured approach to those more opportunistic decisions and doing it in a way where they realize there's just fewer shots on goal and they need to get it right.
I just wanted to kind of add something in here. I think the other attribute of this situation is that there's a ton of uncertainty, and off the back of uncertainty, resilience is a really important thing. And I think people's sort of emotional health, et cetera, it's definitely been impacted. And sort of being an entrepreneur is not necessarily as easy. Raising money is not as easy. And I think just having empathy for kind of the situation and just that we all sort of help build resilience around the table and within sort of our communities is really important.
Yeah, I would reiterate the need for kind of data numeracy and kind of pragmatism, but kind of on a totally different dimension. One of the things that I've been most impressed with amongst a handful of our founders, I think are kind of performing exceptionally in this environment, is the ability to kind of make tough and kind of company defining decisions that are painful, but then really put their hands around their team and kind of bring everyone back to the table and re-energize that team around this kind of new redefined mission. And so obviously that takes a particular leadership quality, but the companies that are, I think, going to do the best in this uncertain time are the ones that are going to get the best out of their people that stay and that kind of survive this. And so to the extent that you can be thoughtful about how to deliver bad news, but again, kind of get the train back on the tracks and get everyone re-energized and recommitted and kind of moving forward together. I think that's been challenging, obviously, but super important and impressive when people have done a great job at it.
Shri, you're focused on a lot of the sort of wellness and life improvement stuff from an investor perspective. I'd be curious as to what you've seen from some of the founders in terms of, dealing with, morale on the team and just some of the wellness stuff within companies that you've seen has been beneficial.
Yeah, I mean, I've seen people go both ways. Everyone's trying, right? But some people just do it better. What I've seen, just to kind of tie into your last question, is the founders I've been most impressed with are the ones who've been super proactive. They didn't wait for us to tell them like, hey, you should. By the time I could even get to them, which was like a day, right? Like they've already been like, hey, I want you to introduce me to so-and-so. I've already spoken to these 5 people who've gone through 2008. Here's my plan. Here's what I'm cutting. Here's where it'll get us. We've already planned like cuts across the board for everybody. It's hard, right? Like we're laying off 2 people and this is where it'll get us. The proactiveness of the founders, who I think will hopefully get to the other side, has just blown me away. And it's those founders who've also thought about, how do I get the team together, right? So some founders are starting the morning every morning they do a morning meditation with the team. And these teams are small because they're relatively early, right? Like they're like somewhere between 8 and 20 people. And so they're doing morning meditations. They may do lunch together. You know, they're giving people time in the day to like deal with their personal life. And, you know, they do like Friday happy hour. They're trying to recreate team events and camaraderie and support without making it a required thing, because everyone's life situation is different. There are people who have kids, there are people who don't have kids, there are people who are taking care of aging parents. And so I think I've seen a lot of founders think about it, and I have seen a few who don't think about it, right? And we've encouraged them to think about it, but I think it's really hard leading through something like this. It's harder even than 2008 because you can't do it in person. And so the best ones are proactive, and they're very thoughtful about how do I motivate while being extremely realistic about where we are as a company.
Just given the lack of in-person and the fact that we've been doing more virtual stuff, what does this mean for venture geographies? And, you know, some of us are, you know, kind of locally focused or are more used to doing things, you know, kind of in our own backyard or very supportive of our own kind of, you know, communities. One, I mean, from a business continuity perspective, I mean, I've had founders in my portfolio start to think about maybe that they and their co-founder should move to different cities or at least have some kind of a backup. Do you think this will change the way geographic concentration, you know, works? You know, Michael, I'd be interested to hear your perspective. I'm sure you're super supportive of the LA tech scene, but frankly, right now, you know, meeting a founder who's based in LA or based in Idaho, there's actually no difference in that pitch interaction with you. Do you think it'll be less important as to where you are geographically?
I mean, we've always invested broadly, so you know, that will continue. Whether kind of the industry writ large changes, I think a couple things, you know, still remain to be seen. So how long and how deep is this kind of work from home environment, I think will inform how much that is a new normal from all companies. Like companies either that even have an HQ and everybody's in the same geography work 2 or 3 days a week from home. You know, you can imagine that future of the world. And I don't know, you know, I don't have a crystal ball or a point of view necessarily on what that looks like. But I think one of the reasons why investors tend to prefer investing in their backyard is not just so they can go spend time with the company, although that's obviously important, but it's also kind of their existing networks and Rolodex and their ability to put their thumb on the scale in other ways with things like hiring and BD and so forth are also somewhat localized. And so I think that, you know, again, we would take a first meeting with a company in Idaho by Zoom in normal times. We would either fly them to LA or fly to Idaho before writing a check in normal times. And so we'll have to see what that looks like in the future. And we would always ask ourselves, you know, why is this company based in this geography? Is it, you know, positive, negative, or neutral in terms of their ability to access talent and customers and kind of all those normal questions. So there may be differences in terms of at least accessing talent and customers if the world shifts to a more distributed remote environment. I don't necessarily have a prediction on that, but there's reasons why being in, you know, major metros or the backyard of a VC has some actual validity and value. But again, we have investments that are not in tech hubs, so it's hard to say. We're certainly not closing down the idea of investing anywhere besides our backyard, for example. Like we're not retrenching. We're kind of staying with our normal kind of geographic approach, at least.
Gotcha. Are there any trends that are coming out of this period? I mean, Ashley, you talked about, you know, social connections and networks that you see having a permanent impact. You know, for example, I think, you know, House Party's been up at the top of, you know, the download charts for a few weeks now, and it's probably maybe the 3rd or 4th group video interaction that at least I've seen in the past few years. And I'd be interested as to how you think about trends that are likely stick or ones that are temporary, and especially as founders think about shifting strategy to take advantage of something like this.
Yeah, absolutely. I think the key thing is to think about, is this an incremental improvement or is this a Band-Aid for something that you can't access because of COVID? So in my mind, house party is more of a Band-Aid because it's, a replacement for otherwise meeting up with your friends at a bar, or seeing people in person. You're playing games together, you're interacting together, but is it better than actually going out to a restaurant together? From what I've experienced on house party, no. However, I think there are things that are emerging as a result of this, where people are opening up their minds, changing their behavior and doing things in a different way, and realizing that way is actually a lot better than what they were doing in the past. So I think the one good example here is telehealth, where people may have avoided doing a telehealth appointment in the past because maybe they didn't know the quality of care that they were going to get, or maybe they thought it would be a little bit awkward to interact with the doctor over video. But now that consumers, patients, and doctors are trying out telehealth for the first time, I think people are realizing that there's a lot of advantages to this, and that if you can get on there, talk to someone for 30 minutes and get a diagnosis instead of having to go to the ER and wait for 6 hours in a room full of sick people, that's actually a much better experience. So I would look for, is this a Band-Aid, or is this something that's actually just better no matter what the context is?
I think also things that are geographically dispersed, right? Like this conference, we did something on Zoom around one of our thesis areas, and because we canceled an event, and the Zoom actually had more people and more geographically dispersed, and it was just easier for everybody, right? Like this. Like this event, I think it would have been amazing at the location you had because it was so unique, but it would have involved a lot of people flying. And, and this, you still have a huge number of people, and maybe it's not quite the same because of we're still in our homes, but it's pretty close, and it probably allows a lot more people to participate while removing the geographic constraint.
I think it's going to be interesting to see. We've run a couple of events that we moved virtually, actually before this whole thing started, because we were getting feedback from parents about, I can't go to the after work happy hour thing because now my kids are home, and so we did a couple of like pitch events, during the day, and got a very different crowd of people. And so I think like we'll probably start doing more virtual stuff even after this thing blows over, because I think it just opens up access. So I think you'll start to see some of that change, and frankly, you already saw some of that in the conference world, where even going into a potential recession, people were looking at the cost of a conference ticket, the cost of a venue, and realizing that a lot of that was sort of prohibitively expensive.
I think there's something to be said for some of the tools and kind of the new products that are being developed out of the need for remote work or remote collaboration, where people are able to focus better on product roadmaps and collaborate more easily. There's nothing like a good whiteboard, but kind of vis-a-vis Zoom, if you're able to collaborate across a particular tool, I think you can ask some very pointed questions and be very clear around what you're working on building, etc. So I think there are actually some big benefits to taking a remote approach. You're reducing friction in terms of travel and all those other things, but I also think in terms of running a project, there's more clarity in a lot of circumstances.
Yeah, I think that Ashley's comment around the idea of getting people to try something new. I mean, there's a lot of services that I would have argued 12 months ago were a better experience, but certain segments of the population or kind of cohorts just weren't willing to kind of break the inertia of the status quo. And grocery delivery, telehealth, remote work, all these kind of new behavior patterns. But there's a forced kind of trial period here for enormous segments of the population around a lot of these behaviors, and so I have to believe that that some of those will stick. And so, like, I'll point to my parents. My parents had never had a grocery delivery before, but certainly they're testing that out now, and it might not be their only method of getting groceries going forward, but I have to imagine they'll do it on some frequency. And you could make a similar argument for specifically kind of older cohorts or older populations who weren't trying things, maybe more apt to do to kind of take a technology first approach to a lot of transactions and segments of their life. So I think that'll be a holdover. There'll be kind of whole industries that at least got millions of people to try it once or twice during this environment, and then we'll have at least that experience and perspective to go back on when they consider it again.
By the way, pro tip for boomer parents that don't have smartphones, if you have the Alexa show, you could do a video chat with them just from the Alexa app. And it doesn't require them to, put on their glasses to check a phone or anything. They could just ask them to give him a call. And that's how I've been communicating with my 80-year-old dad. So, now all of a sudden he's skipped a whole generation. He's post-smartphone. He doesn't even need the phone anymore.
Charlie, one thing I'd add that's really caught me by surprise is the number of things that have become online that I didn't think could be, right? So an example is, my kids, they're 12, they fence. Like, there's no way they can, this is done, right? Like, we'll figure it out at the end of summer. So their coaches, some of whom are older, right? And who are immigrants and English is not their first language, they are Zoom teaching fencing. Now you can't, do it with another person, right? Like, they can't fence with the kid, but they're on Zoom. We have a bag they told us to buy, and they're literally like back, forward, like do this, double lunge. And I'm just like this. So I think we'll definitely go back to in person, but I could definitely see a world where they're like, 8 o'clock is a little late for you to drive out here, but let's just do a Zoom session, right? Like, so I think the add-on and the opportunity to make money that way is going to be really interesting for things that I never thought could be online.
To that point, I'm invested in a dating company that has started to experiment with a sort of curated chat roulette, if you will, for dating. And what's interesting is that whereas previously maybe it seemed like, I don't know, that it wouldn't be something that people would do, it's uncovered time commitments and the idea that, okay, maybe this isn't great, but at the same time committing to getting dressed, going out to the bar, meeting somebody. You can't just tell them to take a walk after 15 minutes, right? So you're kind of committed versus a handful of 15-minute segments. I think it causes you to reassess what aspects of that are important. Yeah. So I think you get a shifting consumer mindset. So maybe it's not better, but your priorities are a little different.
Yeah, it's like an in addition, right? Like, it's an option. It could be a source of inbound. It could be a source of extra layer of revenue. I think people will start thinking of those things.
I also think the ways of working and the norms around online interaction are becoming more solidified as people try different things and see what works and what doesn't. And so I think that just reduces a lot of friction and a lot of the concerns that people had previously.
So I'd be curious how your perception of what skills you're looking for in founders and executives have shifted because of this. As look, a lot of people who are investing, it's funny, I did a talk about what it was like during the dot-com and multiple downturns, and I asked Brad Feld and Todd Dagris to come on, but what struck me was how few active investors were GPs at that time that are still active now. I mean, I got Brad and Todd, but I mean, I literally could almost count on one hand the number of folks who were still active during that period of time. And so there are many investors that haven't seen multiple cycles as investors. And I'd be curious as to, going into this, is your mindset shifting on what kind of founders you're looking for, or the most important skill as we go into this environment? Don, how about you?
Yeah.
Don, you're a little bit low for some reason. I don't know. We lost your.
Can you hear me now?
Yes.
Okay. Yeah, I started in growth equity in 2008 with Jefferies Investment Bank, and it was definitely a time where we scrutinized opportunities a lot more. I literally started in, I think it was like February 2008 or something along those lines. So, our diligence work was a lot, extremely, extremely thorough. We built a lot of models around, financial engineering, and probably weighed the quality of the entrepreneur less than we did the quality of the business model, call it, and sort of the financial approach. I think, sort of in really amazing times, folks will simply back entrepreneurs and expect that sort of there'll be some twists and turns, but the rising tide scenario oftentimes is sort of a self-fulfilling prophecy. And so that would be sort of the most stark difference that I've seen between sort of the past financial crisis and then the 12-year bull run that we experienced.
Cool. Shri?
So, I wasn't an investor at the time, but was in the tech world both for 2001, seriously dating myself, and 2008, right? And I think this one is harder just because everyone's locked down. But I think the things that get people through all of these times is that ability to kind of lead with empathy. And because, not only do you have to make the hard decisions, you have to keep the team with you if you want to get through to the other side. And so I think it's something we've always looked for, but when you think about even our current portfolio now, I can see the people who do it well. And I think those are the ones that regardless of where their business is now, those are the ones that I feel will get to the other side of this.
It's interesting that you bring that up. I was doing a virtual dinner the other night. We do these neighborhood dinners, and we used to do them in person, but we've been doing them every week, over Zoom. And somebody was commenting about how, when the whole family is together all the time, that they now, when mom comes home from work with, with an issue, that family conversations are just a lot more open, right? And they're encouraging their kids to talk about how they're feeling about something, because there's literally there's nowhere to go to hide. And so they're just, people are kind of much more open about this. And I do think the empathy aspect of leadership is really coming through. I think it's coming, it's a much more commonly accepted thing across generations. And I think, the fact that we're working from home means that there's less of this strict division between professional life and personal life, and things are opening up a little more. I would ask, actually, before we take questions, and if anybody has a question, feel free to raise your hand. What do you see as the most positive thing coming out of this, either for the tech community or just, kind of day-to-day life? I mean, what is an aspect of positivity that you hope sticks as part of this that you're looking forward to? Ashley, anything come to mind?
I think because I'm excited about aging populations and boomer generation, I think a lot of, like we've seen with our parents and grandparents, a lot of people are trying new things for the first time and realizing that they can do it and that it works. And so I'm excited that this has sort of been a little bit of a tipping point to get people to try new things and to shift their behavior in ways that I think is going to stick and provide long-term value for them as consumers, but also, for businesses.
Yeah.
Michael,
I would,
any positive notes?
Yeah, I would point to the empathy as well, but I'll specifically say kind of empathy for the fact that team members, clients, people you do business with have personal lives and have circumstances outside of their kind of work selves. And so that's always been true. And there's all kinds of structural things that we as a country and society and industry struggle with on that dimension. But hopefully this environment is giving people a little bit more window into that reality, and hopefully some of that empathy and awareness will persist.
Yeah, I mean, I think we're really fortunate to be working with so many, great entrepreneurs and seeing sort of, what superhero moves come out of our particular environment. I mean, there are going to be some sort of dramatic twists and turns, and things have already been, sort of somewhat dramatic. And entrepreneurs, have come out on top in many cases. And so it's really exciting seeing sort of what types of moves people are making to shift and to succeed in this environment.
Cool. I want to get a chance to open it up for any questions that folks might have. If you want to use the little hand raise button, we'll. Okay, we have completely covered everything there is to consider related to this current environment. And
Looks like you got one in the chats from Jason.
oh, cool. I don't know. I think you know what it is. I think I'm realizing I'm missing a big screen. That's where I'm really at a disadvantage here. Jason, what's your question?
Hello, I'm Jason. I run a company in Brooklyn called Taproom. We're sort of a beer platform with very heavy on e-commerce. Spoke to a lot of you. We're growing very quickly during COVID as people are learning about the ability to buy alcohol online. It's a new adopted behavior that people weren't doing before. I have a question around sort of leadership and culture. I think for a lot of companies, we're very ops heavy. We're very, a lot of fulfillment happening at the fulfillment center, drivers, inbound freight. So we have a big ops team that unfortunately cannot work at home, like an e-commerce team could, like, customer service and HR, everyone else can work at home. And I think we had some issues in the beginning with this sort of upstairs, downstairs mentality. They're risking somewhat of their health to be around others in the operations field. We're growing quickly, so we hired, another 20 people in 2 weeks. So, there's more people in the same space. And I'm just curious how you're advising founders dealing with this work from home culture, but also this operations culture that are sort of trying to work together while during a weird time in COVID.
Sure. Anything come to mind? Shri?
Sorry, go ahead.
I was just going to say, I think, taking sort of precautionary measures and just applying kind of prudence and thoughtfulness to, the typical kind of operational process that you would have gone through in sort of different times is the way to, sort of abstract it. I think, looking at it, in a more detailed way, leveraging, remote work, as we've talked about before, figuring out ways to sort of streamline to, in some cases, if it's a delivery process that you're pursuing, leveraging, call it on-demand services to provide you with the delivery services, whether it's loading up an Uber XL with product rather than having kind of one of your deliverers deliver the product, if that makes sense, or sort of otherwise, and finding ways to eliminate friction points given the circumstances is the approach that I would imagine works.
One of the things I'd also share there is acknowledgement, just even public acknowledgement, right? Yeah. That if I, order something from you, even getting an email after to say, hey, by the way, your order was made possible by, this particular warehouse worker who we're highlighting today, and put them in the receipt or on social media. I've been talking to one of my companies about marketing during this particular period of time, and they make SaaS software for radiology clinics. And, when you think about, like, you pull back for a moment and you're like, who uses this software? It's doctors who are dealing with people who have cancer right now, right? And then, like, we forget that, like, there's other people who are sick during this period that aren't necessarily related to, coronavirus. And I said, you know what? I would be acknowledging some of these people in cancer clinics and all that sort of stuff as, heroes, the same way, every time you turn on the TV, it takes you 60 seconds to realize who the actual commercial is for, because it seems like so much of the marketing now has shifted to focusing on frontline workers and all that sort of stuff. And I think startups could be doing the same thing. Instead of trying to sell me something, tell me who made it possible.
And I think internally at your company, right? The fact that everyone else can stay home is because your revenues are skyrocketing because these people are out there. And so, just like New York does the evening clap thing, like everyone at Taproom who's able to stay home and have a job, it's because a certain section of your company is out there risking themselves a little bit.
Yeah, that's kind of where my head was going. To the extent that you are doing any, team stand-ups or happy hours or kind of virtual gatherings, I would certainly make sure to include operations to the extent you can, but also, bring the acknowledgement and recognition and thanks there, you know, such that the operations team feel like they're part of the whole team and they're getting thank yous and acknowledgement from their work from home peers, I think is certainly important. And then obviously, you know, anything you can do, again, is considering your business is seems like doing well, anything you do to make their life easier, more comfortable, you know, you reward them either economically or with perks that, whether they're now or they're in the future, you know, just ways to let them know that they're being appreciated. I think, you know, you could probably be creative there, but that's where my head goes.
Gotcha. And Demolis raised his hand, so we'll take a question from him. Go ahead.
Hey, everybody. My name is Demola. I'm the CEO of Civic Eagle. We're a B2B SaaS company that helps companies lobby and manage legislation and regulatory information throughout the country. My question is that for those of us that are B2B enterprise SaaS companies and traditionally build relationships in person and sell larger accounts, do you have any advice for how to continue building these relationships, these sales-oriented relationships virtually? And then also, have you seen a slowdown in growth from your portfolio companies that are directly correlated to this kind of change and shift in selling?
So, you know, we've seen folks who, you know, typically close deals kind of in person, leverage associations or friends or relationships who, you know, maybe know who that target customer is, know that target customer. Or one approach we've seen kind of be successful.
Don, could you repeat that? You just kind of chopped up a little there.
Okay, yeah, let me know. Sorry about that. Must be my Wi-Fi. So, you know, we've seen folks be able to close partnerships, close customers, you know, via association with someone who knows that person or another organization that's connected to that person or that partner. You know, where, you know, typically sort of a direct or in-person conversation has been the approach in other times.
Gotcha. Great.
We've definitely seen companies be affected when they have depended on the conference circuit or, you know, like dinners to get to know and get comfort to close. And so, you know, what they're trying, and I don't know yet if it's going to work, is assuming that people have a little bit more time to learn, like to focus on the learning versus the actual doing, because they're always in front of their computers. They're working on like infographics and little short form clips to just get people to learn about what they do and how it could help them as a way to kind of like get over the talking in person. And they're sending them out and then saying, hey, you know, can we do 15-minute Zooms? But it is hard when conferences are the way, you know, you're found.
Yeah, I would say it's similar to what we're seeing, I think, in the broader VC fundraising landscape, which is if you had a conversation in process and it's far enough along, maybe you can push that across the line. But I think the bigger impacts can be felt, you know, later in the year when the top of the funnel is kind of empty. So that to the comment we just heard about conferences or however you're getting leads, the newer opportunities seem to be the ones that are harder to spin up. And so, you know, we certainly have companies trying different things. The jury's still out on where they work. We have people doing things like, you know, more kind of time sensitive kind of content marketing around, you know, best practices in a coronavirus environment for whatever your product or service delivers. And if you can actually deliver some value that is, whether it's a free version of your product or whether it's just a white paper or something that can actually make somebody's life better, maybe that's a way to break through the noise and get a moment of time from them. But I think also, frankly, you know, we've been counseling our companies to be empathetic and realistic about where their clients are in the world, in their kind of business and life right now. And so maybe giving them a moment and not hounding them or being just changing your tactic or your tone a little bit to be, you know, reflective of what the world looks like today probably is the better tactic than, you know, being kind of a hard charging salesperson. So it's, I think it's going to be a tough time. I certainly think sales cycles are going to be longer. I think top of the funnel is going to be slower to build. And so just kind of being creative and empathetic along the way probably is the best advice.
Yeah, we've seen companies extend payment terms and, you know, do other things to provide information and resources to their customers that they wouldn't have otherwise done in COVID. So I totally echo, it's important to be empathetic to their position.
Before we jump into Zach too, the one other thing I'll add is, you know, Shri, you mentioned conferences, and look, this is an example. This conference would normally cost 15 to 20 grand to put on, and I think we had to upgrade our Zoom account to do this, and that was our total expense, right? And so to the extent that you can be a resource to others in your industry, it may actually be easier to ask a potential client to hop on a webinar with other potential clients for others that are trying to sell to them, to ask them, you know, in public, hey, what are you focused on? You know, what are your priorities and all that, to build anything that builds top of funnel. Like, a lot of your customers probably have a lot of questions, right? So instead of just selling to them, can you be someone who informs them? I think now is actually a really good time to build top of funnel, maybe not to close, but to start doing some of that content marketing, because people do have a little bit more bandwidth for stuff like this. Cool.
Yeah, I would agree with that 100%. I mean, I think content marketing, I think, you know, various forms of, call it organic marketing, you know, PR, you know, even if it's, you know, something around how the market's been detrimental to, you know, a certain approach you've taken or whatever else, you know, anything that captures eyeballs and, you know, captures, you know, email addresses or phone numbers or whatever it is that you're going after, is great.
Cool. Well, thank you very much on the panel. I really, really appreciate it.